Hi dear traders! Last week investor sentiment was shaped by corporate earnings reports from US companies. The data showed low revenue or even losses and promised downbeat future results. The worst part is the forecast of a recession, amid which large US companies started to lay off their employees. Find out more in our video review about how the situation in the forex, cryptocurrency and commodities market has changed over the past week. The US dollar was losing its ground, thus the US dollar index, which measures its value against the basket of 6 major currencies, lost 1.31% last week, having tested the support level of 106 points for the first time in 2 weeks. Amid slightly less hawkish comments made by the US Federal Open Market Committee, investors hoped to see a 75 basis point rate hike instead of 100-point increase, despite record inflation in the country. Meanwhile, traders cheered at the news that the European Central Bank decided to raise the rate at its meeting on Thursday by 50 basis points instead of 25. Yet purchases of the euro did not last long, as traders' fears about a looming recession are growing after the recent data showed a decline in the eurozone business activity. The British pound often follows the trajectory of the euro, so last week it returned to the key level of 1.2000. The Bank of England is also expected to take aggressive steps in response to the highest inflation rate in the past 40 years. Unlike the eurozone, UK PMI data indicates a rise in business activity in the country, which gives optimism about the future of the pound sterling. The cryptocurrency market also showed mixed dynamics. In its quarterly report, Tesla announced it would sell 75% of its assets in Bitcoin. Elon Musk explained that this is necessary to do due to the lockdown restrictions in China. He also added that the selling did not mean his complete refusal of crypto. The quote of the number one cryptocurrency is staying above the support level of $22,000 per token. In the meantime, BRENT crude closed last week near the mark of $104 per barrel. Joe Biden failed to gain support from the Saudis and convinced them to ramp up oil production in order to lower energy prices. At the same time, oil stays under pressure due to the announcement from the Libya's National Oil Corporation about the resumption of production at several oil fields. Gold also has a bearish outlook. The precious metal was depreciating amid rising borrowing costs. Yet gold closed last week with gains, as markets reconsidered their expectations about the policy of the US Federal Reserve. The quote returned to the level of $1,700 per troy ounce, but the downtrend is likely to persist according to analysts. These are the trends of the last trading week, and we are looking forward to a new week and new events. Subscribe to our channel to learn the latest market news and trade with profit. See you soon.